This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, July 24th, 2015. Euro dollar. So the euro seeing a minor correction out from the recent lows that we saw at 108.09, with the market extending above 110 in Thursday price action. At this point, it is possible that this correction extends a little bit further to the upside, though the market is clearly still locked within a well-defined downtrend. Really, only a break back above recent highs that we saw in the 12.15 area would compromise or take the immediate pressure off the downside. A lower top is now sought out, ideally somewhere ahead of 12.15, in favor of the next downside extension below 108.09 and towards that multi-year low from March at 104.62. Sterling dollar. So cable saw some nice setbacks in Thursday trade, though the market still looks to be constructive, with a potential higher low now in place in the 153.50 area ahead of the next upside extension beyond the 2015 peak at 159.30. At this point, only a break back below 153.50 would take the immediate pressure off the top side. Dollar yen. So dollar yen has seen some setbacks in recent trade, with the market stalling out ahead of 124.50, and this suggests that we could see additional corrective weakness in the sessions ahead. Look for a break and close below recent lows at 123.57 to open the door for an acceleration of decline to potentially back down towards the lows that we saw going back to the 8th of July at 121.32. Euro Swiss. So Euro Swiss continues to look extremely constructive, with the recovery outlook well intact, as the market now nears critical resistance in the form of the high that we saw going back to the 4th of June at 105.75. A break above 105.75 would be a significant development and would open the door for a retest of the February peak at 108.15 further up. At this point, look for any setbacks to be very well supported ahead of the 104 area. Aussie dollar. So Aussie remains locked within a well-defined downtrend, and the market has been grinding just off those recent multi-year lows that we saw earlier this week at 73.27. At this point, deeper setbacks are favored on a break below 73.27 towards next key psychological barriers at 70 further down. Any rallies in this market should be very well capped into the 76 area. Dollar CAD. So dollar CAD has recently traded up to fresh multi-year highs just shy of the 2009 peak at 130.65. At this point, with daily studies overbought, there is risk over the coming sessions, especially if 130.65 gets taken out, for some form of a corrective pullback that could take us back down towards the 126 area, from where a fresh higher low is sought out in favor of bullish resumption. At this point, key support now comes in at 129.16, and a break below will confirm the onset of a correction. Kiwi dollar. So we've seen an upside correction in Kiwi after the market broke down to fresh multi-year lows just under 65 barriers, and the market could now be poised for additional corrective upside over the coming sessions to continue to allow for some oversold technical studies to unwind and normalize. But overall, the downtrend remains firmly intact, and any rally should be very well capped into the 69 area ahead of fresh downside below 65 and potentially down towards 60. SPX 500. The S&P 500 put in a record high in May, and since then has been unable to establish a fresh record high beyond, with the market looking like it's putting in a topping, carving out some form of a structural top over the past several months. At this point, look for the latest stalling out ahead of 21.37 to open the door for a renewed downside back towards critical support now, which comes in the form of the March low at 20.40. A break below the March low would confirm the onset of a top and accelerate declines. Gold. So gold remains under pressure after that significant breakdown that we saw early on Monday, with the market now potentially seen towards next key psychological barriers at 1,000 further down. At this point, we would need to see a break back above the 1175 area to take the immediate pressure off the downside in the gold market.